And Bitcoin is just like, yeah, we don't do any of that. Just here's some sats for you. So
You'll own
That's
sats and you'll be happy.
yeah, you'll own sats and you'll be happy.
Here we are with special interview with Suzu.
No one knows
Came
where
out
he
of
is.
Yep. Fresh off the yacht.
Welcome, Ben.
Finally found him.
How's it going, sir?
Yep.
Good to have you on.
I'm ready to get this thing going. Whoa, that was like some crazy
So how are you
just
doing,
bring-
Ben? What's been happening in your world? What's news? What's happening on your side?
I mean, watching ETH pump into the stratosphere, which was always a risk.
Says the guy who's been shorting.
Says the guy who's been shorting ETH since like 20-something hundred. But yeah, after suffering some liquidations on that pump, I'm still surviving.
You came to your senses eventually.
Well, you know, it's funny because I remember looking at that bottom and being like, this could be like a Wyckoff accumulation pattern that's happening here. And it was. And
that old hindsight thing is amazing, isn't
it? Yeah. But just look at that bottom. Look at that bottom right there. It's like prototypical.
Yeah, come on.
Wyckoff or Wickoff. I don't know. Whack off. I'm not sure how you pronounce that. But yeah.
Why ETH specifically?
Just because I was just using GMX, so it's one of the three that they allow. So.
But hopefully you have GLP as well, so you're getting paid off yourself.
Nope, just paying GLP holders. That's all. I have sacrificed myself on the altar.
So the question is, have you changed your thesis? Are you longing right now, or are you waiting?
I am not longing. I'm waiting. I had always thought that there might be a risk just due to, like, if you zoom out just a little bit, you can see that, like, you can pretty much draw a straight line from that top, that top up at the top, and then hit that second little hump there, and then on down. Like, I think there's a good chance that we bounce off the 1700 mark, and then go back down a little ways. I mean, as to whether or not we hit the bottom before, I think it's likely we retest it at least eventually. But like, we were way oversold, and you know, in retrospect, I was getting a little too comfy shorting.
Because I think the major resistance point is sitting at 1705 from
1710, 1705, somewhere in there. Yeah, that's right where I was seeing it too. Yeah. Like, I think there's a real good chance we'll peg that thing from the bottom and then maybe drift back downward. I don't know. Like, so right now, like, I know that everybody's dunking on all the macro people right now, because, people need something to get excited about. And I'll take those hits as a macro or, but I do think so. Like, right now, if you like take a look at like what's going on in the treasury market and the Eurodollar markets, like, they seem to be sort of hinting that the Fed's not going to be able to keep raising rates. And it's not exactly, I mean, you sort of have to do some, inferring as to what's going on there and why. But like, I don't know. I don't know if they're done yet. Like, I I I don't think they can just reverse course though. That's really the thing is like with inflation numbers where they are politically, I just don't think they can just go, oh, never mind, we're just gonna save all the asset holders and we'll just let this inflation thing go. Like I don't see them doing that. I just can't really see them just being like, all right, casino mode back on, activated. Like buy all the dog coins, everybody.
Yeah.
Because
I totally agree with you. It's kind of like it is a Titanic, this, isn't it? And it takes a long time to turn the bloody thing. And
right.
I have absolutely no idea about the macro and policy and all of that, but it just seems kind of impossible almost for them to say, okay, well, we're not going to do.
Now, what they might do is they might just pause. They might just take a beat and just stop raising for a little while and let things kind of settle out and see what happens. Because like a lot of the indicators are showing like all the commodities like copper and a lot of the grains and stuff like that. Like those things are, the charts are rolling over a bit. And even oil has come down a bit, and those are all like key inputs to inflation. But, I don't think those numbers are going to, like the CPI, I don't think is just going to drop precipitously. It's going to take some time. Historically, it's always taken a little bit of time for those numbers to come down after they peak. And so I don't think they're going to have the political cover to just be like, okay, interest rates back to zero, burr mode, let's go. And until they've got inflation kind of licked, I think there's going to be hesitancy to go into easing mode. Like everybody wants to fight the last battle. So like 2018, or it was early 2019, like January 2019, I believe, was the whole like Powell pivot where they were raising rates, and then they just kind of turned on a dime and changed to easing again. And I think everybody's sort of expecting that. But the thing is, that was during Powell's like, I'm trying not to get fired phase. Because, and like, I think you can't really view what's going on now through the lens of like recency bias, because nothing like this has happened recently. So like, if you think that like they're just gonna go full on, let the stock market ride mode, I don't think you're gonna have a good time with that thesis. Like, there's, I think, still significant risks to equities and to crypto, especially because crypto is just, it does whatever equities do, at least lately, but it just does it harder and faster and earlier.
So what do you think is going to happen next week? And we can obviously do a follow up to, because there's going to be a break after next week. Is that correct? Until September?
Yeah. So in between there, though, the Fed has their Jackson Hole conference that also is a big sort of news thing, because that's kind of where they do a lot of this is our, way we see the world looking right now. This is how we're thinking about things, and these are the issues we're focused on, that sort of thing. So like, you're definitely not. It's not going to be just like dead air from the Fed during that time. It's going to be
Why
still.
did we bring him onto the show? He was supposed to give us some kind of good news. I mean, come on.
I mean,
yeah.
the good news is we just had a big old pump, and you can feel good for a little while.
Yeah.
So enjoy it. Like I don't want to be the perma bear guy because they don't make money. They they really don't. But like, I guess the things that I'm looking for, like in an actual bottom, would be some evidence that all of the issues, because like, first of all, like you've got China's real estate market just imploding still. I mean, and that is a huge, huge real estate market. Like twice the size of the US real estate market. And on top of that, it's like 85% of their people's savings is in real estate. And that is a giant hole. And the whole world is sort of interconnected here. And you can't fill a hole that big without like some real economic damage. And you don't know. It's just like the 3AC situation, but it's just playing out much more slowly because China's like, very opaque about how they do things, and they're trying like hell to keep price discovery from happening. And so like it's like the 3AC thing though, where it's like you don't know how deep people are exposed to this stuff because the traditional financial system is opaque and you can't see who's in deep trouble over all these mortgages and stuff. And you don't know. I mean, and then you get all the the cascading problems where like this person goes under because they were way overexposed to this stuff, and then they go bankrupt, and then that causes somebody else to have issues because they trusted that person, and you get these sort of like cascading liquidations. But the thing is, the traditional financial system, bankruptcy proceedings and legal stuff, it all takes so much longer. It's not on chain. It's not like you're getting liquidated in a block and then the next guy gets liquidated the next block. Like, it doesn't work like that. Like, you got to go through like everybody saw the 3AC filing this week where, they have to present like an argument for why they should be able to sell all this crap to a judge, and then they they got to kind of work through all that stuff in a very legal manner. I mean, honestly, that's the whole point of smart contracts, right? Is to get rid of lawyers.
And it works. It works.
I'd love to see Suzu kind of like stood up in court saying, but Your Honor, these crypto dick butts are actually worth 10 ETH, not 7.
Yeah, I'm looking for a good deal on crypto dick butts, so I've been patiently waiting that liquidation.
Is there a good index that we can see kind of
crypto dick butts? Yeah.
Chinese equity is
like I said, everything in China is harder. I haven't found one. I'll be honest. I don't, and I'm not an expert in like that whole area of the world by any stretch of the imagination. I'm not an expert in anything. I'm a macro LARP, but but it's just, I think that there are a lot of issues here that still are largely unresolved. And I think everybody's been so trained over the last decade to just buy the dip, buy the dip, buy the dip.
Yeah.
We're down 20%. They won't let it go lower than that, right, guys? And then and this is for like all markets, because that's just how it's been, because you've had a period of below average inflation. And so the Fed had latitude to basically just go, well, let's just, turn on the QE until it works, because they did QE1,
Yeah.
QE2, QE3, and it's like inflation was still sitting below 2% the whole time. And in fact, they were actually worried about that. Like Janet Yellen was worried that inflation was too low.
Yeah, I remember that.
And like you can't, I mean, because the United States has a lot of outstanding debt, and one of the best ways to deal with large quantities of outstanding debt is to just inflate it away. And if your central bank is impotent when it comes to being able to actually cause inflation, which they are, because none of this inflation was caused by the Fed. It wasn't. It was the combination of QE and fiscal spending, but it's mostly the fiscal spending that actually, like, the government spending money, because they put the money into people's hands. Like the Fed, all they did was just kind of act as like a buffer to keep from like destroying the treasury market while they did it, because they just kind of act as like a reservoir for treasuries that, like, it's like an overfill tank. You know what I mean? Like that's really all it is, though, because like QE is just an asset swap. You have cash and you trade it. The Fed trades it to the banks for, it's not actual cash. It's just bank reserves, but that you just take bank reserves and swap it for a treasury. And really, both of those things are money. They're both money. But so you're really just trading money for other money. But the thing is, one is like kind of future money versus current money in a way, but in a way, not really either, because treasuries are frequently used as money in the repo market, because you can actually just take a treasury and you can go into the repo market and you can go, hey, I'll trade this for some cash. And it's a super deep and liquid market that you can just kind of trade in and out of. So it's, you know, you didn't make anything. All you did was just trade one thing for another. So
So what you're trying to tell me is the article that I read about stingy millennials is not the real cause for inflation.
You're right. You're right. It's not. It wasn't just millennials and eating too much avocado toast that that caused all this. Yeah.
What is to the point? What is to the point where people are kind of surmising that Yellen's trying to kind of do everything in their power to effectively go complete Dixie Bull? And what kind of
I don't think they have a choice.
what negative what? Yeah, because I've heard the argument where they'll do everything in their power to make the dollar and obviously the Dixie as strong as physically possible. And they were kind of, the argument was that they were trying to do this. It's like if we're going to crash and burn, everyone else is going to crash and burn around us twice as hard. But it didn't really necessarily make sense to me, because I was like, well, how do they have the control over
I don't think they
the strength
want
of the dollar? And then
I don't think they want that. I just think they know that that's what's going to happen. Like, because if the dollar appreciates too hard, what ends up happening, because like and so you have these super high oil prices, right? And energy prices, which are largely priced in dollars. So everybody around the world needs dollars, and lots of them, more than they needed before. And they have a lot of dollar denominated debts. And what's happening is they're all selling their local currencies to get those dollars. And so they sell those local currencies. So like, your Turkish liras, your Sri Lankan whatevers, your like all these currencies that are blowing out, even the euro. I mean, you're selling euros to get dollars so you can buy oil. and you have to sell even more euros than you used to get the same amount of dollars to get the same amount of oil. And so that causes everybody else's currencies to depreciate relative to the dollar. And that's why the Dixie is just been rocketing up. And the problem is that I don't know if you've ever followed like the Brent Johnson's dollar milkshake theory, but like that's basically what this is that and if you don't know what that is, I highly recommend you go check that out, because that's basically what is happening. Is that the dollar is going to one by one break every other currency in the world, because it's just every time we have one of these bank runs in the broader economic system in the like around the world, we break a few more of these currencies and they end up dollarizing. And then you have a bigger system that has to be backed up. But the problem is, like, the dollar system in the United States, the Fed can just make dollars anytime they want. They can just go, oh, here's some bank reserves. There you go. We saved the day. It's all good. It's nice and stable. The problem is that the Fed doesn't really have great tools for doing that for the rest of the world's dollar system, because the rest of the world's dollar system basically is just being sort of run. It's like a fractional reserve system on top of another fractional reserve system, where you have banks that are making fractional reserve loans, and the only thing they have is deposits. Like their version of like bank reserves is just a deposit at a U.S. bank that does have access to reserves. So it's, but they don't have access to the Fed, so they can't go to the discount window and just be like, "Hey, I'm a little short. Can you hook a brother up?" And and the reason that's important, that's why the Eurodollar market exists. That's what it is it's basically a market so that entities can and firms can like get their cash flows right, so that they have so that they have the dollars they need when they need them. And that's why the Eurodollar market is so important, because it's basically keeping an eye on how stressed out and what the cost of dollar funding is for everyone outside the US. And because those ones don't have access to the Fed the way US institutions do. You do have the Fed has like what are called swap lines, which are basically if others, they have certain central banks like the ECB and Bank of Japan and stuff that they have deals with, where if those banks need like some dollar liquidity, they will do a swap for their assets. So they'll take like some JGBs, or they'll take whatever, and they will swap that for dollars. And those are open. And you can actually see that those facilities have been getting used lately, the last few weeks. Those swap lines, the ECB has been using the swap lines the last couple weeks. Not a bunch. I think it was like 198 million or something last week, but which is pretty small in the big scheme of things. But you can't. Yeah. So those things help to kind of ease some of the stress in the global dollar system, because at least it gives some people access to to dollars, but there's lots of banks that still don't have access.
So is this, we touched upon it in one of our spaces, but is this the Circle deploying their Euro stablecoin? Is that coincidence that this is happening now, or do you think this is a little bit more thought out?
I don't know.
This euro ball account is so funny.
I don't know what to think about that because, like, honestly, crypto, the dollar is king, and it's kind of all the other stables right now are irrelevant because, like, I think part of it too is just that, like, it's sort of the ghost of Christmas future. Like, but the other thing too is, like, I don't think you're gonna have like real FX trading happen on chain until you get like actual CBDCs. And I have my own feelings about like CBDC. What I would like to see is them to be treated like cash, where they're completely, you know, they're not tracking you, they're not doing all the terrible things that everybody's afraid of with CBDCs, and the privacy is maintained, and they don't do all of the, we're going to, take the money of all the high earners and apply a negative interest rate to it, or like just all the fuckery that they could do.
They're gonna deposit into Abracadabra and
or
take out
say that, like,
shape loan against it.
Yeah, or it'll inevitably be like, okay, here's your CBDC, get 50% off when everybody will get a stimmy package, and you can only spend it in the gift shop at Trump Tower. But
do you think they'd call it an airdrop? Do you think they'd keep
I don't know. I don't know.
Call the stimulus packages airdrops.
But
everybody trying to gamify the airdrop.
Yeah, but that's the sort of dystopian nonsense everybody pictures with a CBDC. And like,
but there's no ways that they'll introduce a CBDC without the functionality / ability to be able to do that kind of stuff. It kind of just buys into everything, I mean, your KYCs, all of that kind of stuff just ties in beautifully with CBDC as a product. I mean, there's no way around it. But then there's also ways around it in terms of, once it's launched, I bet you there will be an infinite number of services within the DeFi space that will be able to essentially wash that in a completely like transparent and legal way. And it'll be, that's fine. Here's my CBDC. I'm putting it into this exchange, whatever you call it. And then it's back to normality, So it's kind of like, that's the way I see it playing out. I mean, and that's the way it's always played out through the ages, whether it was, medieval times and you got to pay your taxes, or whether it's, dodging the IRS. It's the same story. It's not going to change.
Yeah. And that kind of moves into my next point, which is that, like, if you had an actual CBDC though, like, it would make USDC and Tether just completely irrelevant, because, like, when you get these dollar squeezes and stuff like this, the issue is nobody has access to dollars, and that can apply to Tether just as much as it can apply to Circle or anybody else. The beauty of a CBDC, because at the end of the day, everybody, the highest form of money in the dollar system is federal bank reserves, and the Fed can make those. And so if the Fed has a CBDC, they just go beep, boop, boop, here, have some reserves. And you don't have all these questions about whether they're solvent, who's auditing their stack. Like, all that stuff is just completely irrelevant, because it's now all on chain, and it's all controlled by the Fed, and they can do whatever the hell they want. And so it's just back to, like, okay, the Fed. And you know what that also does is it also makes the Fed a central bank, for one, because they're actually now central to dollar creation somewhat, and then for the entire world. And the other thing it does is it actually gives them information that they can use about what's actually going on in the rest of the world because they don't know. They have no
Yeah.
fucking idea what's going on in the global dollar system, and they just kind of pretend like it doesn't exist most of the time, especially when you like listen to them talk and stuff about, you know, what's going on over there. So I think there are definitely some advantages that a CBDC could have over where we are currently. The problem is all the dystopian nonsense that you know could very well come along with it.
Could you not foresee just the CBDC being? I mean, I'm kind of torn on the idea that it actually comes into everyday life, and I think it probably will, because technology, as soon as it kind of comes out of the box, we have a way of trying to shoehorn it into everything that we do. But could you not envisage a time where it's primarily for financial institution rails with private blockchains and things like that, and that's how the CBDC gets utilized properly, and then effectively a lot of the way that we work currently kind of stays in, obviously a little bit more streamlined and things, or do you think it's like an us and them's kind of system as opposed to a one size fits all for public and institution?
I do think that that is probably the end game of how they're planning on playing this out. Sorry. Yeah, you can cut all that out. But I do think that is the end game for all the how this is going to play out, because I don't think they want to just take the current banking system and just be like, sorry guys, you guys are dead. Now we have smart contracts. Because I think ultimately they want to have intermediaries, because, you know, how else are their friends going to make any money if they can't get between the plebs and their money?
But I mean, the thing is that they'll use the same blueprint they have now, and then they'll just kind of, we'll issue the CBDCs, but then, you know, Bank of England or whoever, the Bank of America can have their own kind of like branded CBDC, the same way that we've got this pound token, which is, I mean, I didn't actually see this website. I mean, this website it's impressive, man. I mean, it really does sell this product in a very, very good way. You know, it's like I look at this thing and I see positive things. You know, I don't think, oh my God, it's this dystopian thing. And obviously that's their intention. And then just coming back to the dystopian idea, I think the dystopian idea is already there. You know, people just don't realize to what extent there is the monitoring of information and all the rest of it. I think, you know, there's enough evidence to suggest that, you know, there's a shitload already happening. All the CBDCs do is it just kind of streamlines everything. And, you know, if you don't want dystopian, then you need to get rid of governments. You know, end of story. I don't think there really is another way. You know, it's just how do you play the game once you've received your CBDCs and, you know, go into the nether regions of, you know, the internet and blockchain. You know, it's kind of like, I don't know, I'm not too concerned about that. I think it's a foregone conclusion that it's going to happen. They obviously now need to devise their own business plan that makes sense. Like you said, they need to take care of their buddies. You know, go to drink whiskey with someone on a Saturday afternoon, and they'll take care of those guys. You know, that's not going to end. And it's just, you know, they will always, the incumbents will always look after their own, and that's what's going to happen here. They'll just be,
do you not think there needs to be a certain level of fuckery for the system to work? Like, can it actually work if everyone's being completely honest?
Let's be honest. Like, there's plenty of fuckery in the crypto system.
Fuck, dude. That's Grant. To answer your question, the fuckery will continue, and no one will give a shit because, I mean, look at what's just happened in the last fucking 3 months, bro. It's like, it's all out there. It's known, and it's no different whether it's government, whether it's degens, whether it's freaking Suzu and his mates, or whether it's Celsius. It's all the same thing, you know. It's just, now we'll just know about it in a better form and with more transparency. Well, that's all it will be.
And will it be more transparent? Like, because ultimately, like, whether it's like people selling tokens OTC, or there are all sorts of ways of doing things off chain. And I think there's always going to be ways of doing things off chain to where they're outside the public view. And or if it's not off chain, it's like, you know, definitely hidden from, you know, where everybody's looking. And
Well,
so
it's kind of hilarious that ZKs are on the horizon just as regulations just about to come down full force. Obviously, additional layers of privacy through ZK rollups and ZK syncs.
yeah. I mean,
one step ahead.
yeah, it's I think that to some extent, like, you're always going to have some level of obfuscation of what's actually going on, but like, I think the real advantage that crypto holds is the ability to have a neutral settlement layer where everybody can see what's going on. And honestly, like, that, it in and of itself
That's
might
huge.
replace like credit reporting and all sorts of other things where, like, you know, the whole idea of like credit reporting is like, how many loans does this guy have out, like how leveraged it, and if all that stuff's on chain and you can just, you know, have it spit out a number for a wallet address or something. Although you never know, because like one wallet address doesn't tie to one particular person. I think that we'll
Yes, it does.
probably, I think we'll end up solving that to some extent too. I mean, solving. I know that a lot of people are, you know, opposed to KYC and stuff, but I think ultimately that's a losing battle. That the regulators are probably going to win that one in the end, as far as
Yeah,
like,
absolutely.
making sure that they
Yeah,
know who's tied to what wallets. But and I don't think that's necessarily a bad thing, because like, if you think about it, the entire crypto economy, part of why it's so difficult, or part of why we get these massive booms and massive busts, is there's no fractional reserve, really. I mean, there are things like fracs and stuff out there that are sort of fractional reserve, but like, you don't really have credit per se. Like, you've got collateralized lending, over collateralized lending, but, you know, that just, when things are booming, it goes way up, and then when things, there's nothing to catch it on the way down, so it just goes right back where it started when everything unwinds. And when you have actual credit, people can take advantage of the low rates, and they can go, yes, yeah, Maple Finance is, it is working on that, but I don't think it's a solved problem yet. And that's only for, like, you know, institutions that have gone through all sorts of like stuff. But like, it's in general, the majority of the market cap of crypto is all based on looping these, you know, and leveraging up collateralized lending. And so it works great on the way up, and then it's convexity up, convexity down, and it ends up dropping way more than you think it would on the way down, because it's all just, you know, tokens, collateralizing tokens, collateralizing tokens, collateralizing tokens, and, you know, all that leverage gets washed out.
So just coming,
why
just
why is everyone so hell bent on cracking the under collateralized loan in this
Well,
space?
I mean, having loans, I mean, that's actual credit. Like, that is
Yeah.
how we got all the economic growth we did the last 100 years, is people being able to say, look, I am credit worthy. I know I don't have the money now, but I, you know, if you give me some money, I know I can turn it into, you know, this business that's gonna, um, reshape the world. And you can't do that really in crypto. All you can do is go, I got $1 million in USDC. Can you lend me some ETH or whatever? And then I'll take that and then I'll buy some shit coins with it.
So you're right. That's maybe we set up our own desk, and that's what we do.
Hang on, that's exactly what I do. How did you know? But hang on, let's go full circle. You started out, and thanks for your thoughts on, obviously, the perspective around, where it's going and what it looks like. And I mean, there's so many different permutations of that. But you started out with this whole thing, and you said that you're looking for a bottom that essentially, you want to see solutions, problems that have been solved. So you want to see solutions in place. I mean, listen, the problems aren't going to get solved. Let's be very clear about that, just by the way.
Well,
but as long as you're seeing solutions that can obviously appease the market to the extent that, this is good, we're on the right track. There are these solutions that are being put in place, and they've got traction. I mean, is that what you're essentially looking for? Is that what your answer is?
It's not so much. It's not so much that I'm looking for some utopian future to emerge. It's just that.
What a pity, bro. I mean,
think
we need more of that.
I think like in the TradFi space, I feel like we're where we were like a month and a half ago or something, where everybody suspects that something's up with 3AC. And we haven't seen the unwind yet. That's what I'm thinking, is like, I don't think the TradFi space has like really reached capitulation yet, because the situation is still worsening. The tide is flowing out, but we don't know who's naked yet.
Well, we've seen who's naked in the crypto space, but we all know.
Oh yeah, we have.
Yes, so we know that the crypto space is kind of everything speeded up, whereas obviously TradFi, everything is slowed down.
That's true, and that is why it's like they're where we were, several months ago. But the thing is, if you get that giant washout in the TradFi space, people go scrambling for dollars wherever they may be, and that may mean it's not like none of these people have exposure to crypto, and some of them may dump all their bags in order to make sure that they have the dollars to keep the lights on and to keep their firm solvent.
But do you believe that the numbers are significant enough from the crypto perspective, where they're selling out of crypto to obviously save the traditional finance positions? Or are you talking specifically about traditional finance offices and institutions selling to get to dollars, where they're saying, okay, well, fuck, we're out of Tesla. Okay. Yeah.
I'm saying that, like, when all the leverage washes out of that system, which takes longer because of all the lawyers that we talked about earlier, because of all the other stuff, and just because China's not very willing to let price discovery happen over there, and they're super tight-lipped about all their data, and like, I think it's going to take longer for this washout to happen in the TradFi space. And when it does, I think it's going to pull crypto back down with it.
Yeah. Okay.
Yeah. And I think that so we've kind of had a dress rehearsal in the crypto space, which obviously doesn't really punch up and doesn't exactly draw down traditional equities or wider further afield. So naturally, when all's said and done and the contagion and risk spreads throughout the global economy, that's when you think we really see the true drawdown, maybe the 10Ks, maybe sub 10K Bitcoin and things like that. Because we've said it before that things do take an awful lot longer to play out, even sometimes in the crypto space. But if it's not playing out and you can kind of see it, and you're looking at this shit all day, every day, it can drive you insane, because you're like, well, something's got to give. It's like
Yeah.
like the bit on like The Big Short where Michael Berry's like just constantly having to email his investors and that like he knows he's right.
Yeah.
But yeah,
He blocked me on
he
Twitter, by
keeps
the way.
he keeps calling for the everything bubble, and I think he's probably right. Like he argues it's dated back since following 2007, 2008. That's when like the artificial prices started creeping into the market. So we potentially got even, like, as I say, the mother of all crashes, as he said. He tweets and then kind of deletes them like 5 seconds later. It's just like really cryptic.
Yeah, I agree with what he's saying. I think it ultimately, but the thing is, predicting when that's actually going to pop. I think again, it kind of goes back to the dollar milkshake thing. Until we've broken every other currency, uh, I and haven't gotten to that level of dollarization of the rest of the world. Because every time, what happens is like 2008, right? You had this financial crisis that, I mean, it started with just some bad home loans, right? And the story is that like, oh, there were all these bad home loans, and that's what broke the economy of the entire world. Now, if you're talking about like a few $100 billion worth of houses, you know, like, is that really what did it? No, it wasn't that. It was that people were taking those loans and getting mortgage-backed securities, and then they were dividing those up and then treating them like they were U.S. Treasuries, basically. And they were leveraging to the tits on these products that were not grade A, but they were being treated like they were grade A. And so they were able to get insane amounts of leverage into the system. It would be like if Tether blew up, what that would do to the crypto system, because everybody treats it. Everybody
Bitcoin's
treats
about
it.
to hit 24,000, by the way.
Nice. Have we hit 1710 yet though?
Yeah, imagine that.
I mean, but yeah. Yeah, but like it's the same thing though. Imagine what would happen if Tether blew up. That's basically what happened, is that something that everybody assumed was a safe and risk-free asset, people were using it to lever like it was a safe and risk-free asset. And that means sometimes levering 50 to 100 times on some currency trade or some, small little basis trade that they're capturing like a really tiny spread on or whatever. But it's supposedly risk-free. And then what happens is, as those things start going under, it unravels everybody, because it had like, worked its way into the broader financial system. So like, it wasn't really about the home loans. It wasn't the people that stopped paying their loans that caused all this stuff to break. It was, the fact that people were allowed to leverage up using all this stuff. And so I don't even remember where I was going with this, but in 2008, you had that thing blow up, and the US had to kind of step in and establish a lot of these tools that we've been relying on the last 12 years or whatever, of being able to backstop that global dollar system. And every time they backstop it, people go, okay, well, I guess this is safe. So we'll just keep doing what we're doing. And it grows, and then they have to backstop it even further when it breaks the next time. So like you had 2008, and then in 2019, like September 2019, you had some issues with like where the repo was blowing up, and they had to do some backstopping there. And then 2020 happened, and they had to jump in and save the U.S. Treasury market because that was blowing up. And so every time they backstop this global dollar system, what it does is it reestablishes even deeper the dollar's position in the world, because this system just gets bigger and bigger every time. And that's why the Fed, the size of what the Fed has to do every time just goes up bigger and bigger every time too. And that's because it's not that like the Fed is just using an overpowering amount of money to try to solve these problems. It's that they're backstopping a bigger and bigger portion of the thing you can't see. Because when you're looking at the US economy, you're looking at this. When you're looking at the global dollar system, it's this, but you're only looking at this. And so like you're just seeing things that were out there show up on the Fed's balance sheet. Things that existed before, but you just didn't know that they were there because you weren't looking at them.
So what is? I mean, obviously, you're referring to the past, which is obviously super important in terms of, the rhyming aspect of things. What is your take? And we can obviously revisit this. We won't obviously hold you to task if you're incorrect. I mean, so don't think that that's going to happen. I mean, the beatings won't be severe. It's just, where do you think we're going? Kind of like, obviously next week, what are your feelings around Jerome's take on things next week, and what do you see essentially for the next kind of 3 to 6 months? And you're very welcome to shoot from the hip on this. I mean, it will be interesting to.
Oh, I will be. I will be. So like the last few times we've had the Fed do their thing, like I think there is a non-zero amount of people that are expecting them to just change course. And it's not the people in the smart money that are expecting this generally. Because if there's a website that you can look at that gives like kind of what the predictions are for like how many basis points that the Fed's going to raise. It's like, I think it's CME has a Fed prediction tool. Yeah, that thing, I think. And you can see that they're basically predicting, like, I think last I checked, they're predicting like a 70% chance or something of, yeah, look at that, 70% chance of a 75 basis point thing. And their little mouthpiece, Nick, I forget his name, Tamiros or whatever, with Wall Street Journal, the guy that leaked out that they were going to do 75 basis points last time during the blackout period, basically said that they're looking at doing a 75 basis point thing. So unless you hear Nick say otherwise in in the next few days, I think 75 basis points is what they're going to do. And with the 9.1 headline inflation number being what it is, I don't think they can do anything really different until they either, until something breaks. Then they'll have to, see what they can do to fix it. But they could just keep raising rates and then just, there was actually a Twitter thread I did on this the other day, like just saying like, what happens if the Fed, starts having to choose between breaking up the ECB with all of their hikes or continuing to raise rates? Like, what are they going to choose? Like, because they want, I mean, their history kind of shows that they kind of ignore the global dollar system unless it beats them on the head. So like, they may just keep raising until they truly break something important overseas and then have to step in and about face. but like, it's a question of whether they're going to be able to, how are they going to do that? Like, are they just going to use swap lines to try to make up the difference and prevent stuff from breaking overseas while they keep just kind of raising that headline Fed funds rate number just to kind of, I mean, that doesn't necessarily change a ton, but like it makes it look like they're doing something if they just keep raising rates, but like they're actually easing out the other side with the swap lines. They're not actually doing QT. They're just raising the number that everybody's looking at, which is the interest rates. So did they do this?
Did you get any feedback from the guys that you tagged on this post that you made on Twitter?
I did, and there's a lot of good discussion.
Yeah, there's some proper players there.
Yeah. Okay. Yeah. So I definitely recommend reading through that and stuff, and it's kind of the who's who of macro in there. It's a good thread, but yeah, it's not a. I don't think I came away from it with any particular answer as to what would happen in that case, but it's just food for thought. So
in terms of go for it, Grant.
Sorry, go ahead. No, I was just going to say I went through and followed all these guys you tagged just to try and screw up. Yeah, I mean, it's a complete minefield, but we'll learn.
It is. I mean, I'm getting pretty deep into the weeds there of Fed watchery wonkery, but like
the thing is, what I find super interesting about this kind of turn of events is that obviously we had the black swan that was COVID, and a lot of those weeds came to the fore, but at that point in time we weren't correlated. It was kind of like there was an initial correlation because everything just went for a ball of shit, but then then the narrative was that Bitcoin kind of passed the test, of the test that TradFi was inevitably going to fail. And, Bitcoin had a fantastic run. I mean, 2019 into 2020 was really, it was a great run. We had the halvening, like there was just so many fantastic narratives in that period of time. And we really did have this established idea of, an asset that was potentially digital gold, and I think there still is quite a bit of argument with a lot of the maxis, and I'm sure there's very good arguments that could support, Bitcoin as being some form of digital gold. But as far as I'm concerned right now, I think that seems to have been a bit of a fail. But it doesn't matter. The point that I want to make is that it was an independent asset. It was kind of like doing its own thing, and there was a lot of enthusiasm and interest, and then all of a sudden it changed. And obviously the main theory is that Bitcoin was being traded by the traditional finance guys, and they brought their fuckery with it, and they're very good at it. They've been doing it for a very long time, and they played the game, and they've been playing the game, and they'll continue to play it. And the maxis wanted to sell their bags to these guys, and the price was paid. The question now is, do you think that there is a possibility in some kind of reality that Bitcoin could decouple from TradFi, or do you think that's locked and loaded and it's fait accompli?
I think I do sort of still believe in like the digital gold narrative of Bitcoin. I think that if it's going to have a use case, that is it. I do not think that it can be the base money of like any sort of functional economy, because it's so rigid. Like it is, scarcity isn't a good thing when it comes to money. Like, because you don't have credit. There's no such thing as credit in a Bitcoin run world. Like it's like uh, I don't know if you've ever heard of like those conventions that all the libertarians have in like New Hampshire, where they like scrape little gold filings and buy bacon off of each other and whatnot. Like, but like that's the sort of shit that these people are dreaming of, and that's not how the world works. Like, you need to have credit in order for the economy to
Very,
work.
very well put, dude. Very well put.
Like,
It might work up Burning Man for like 8 days or whatever it is, and then
Well, it
everyone has to come
does.
back to
That's when
reality.
it does work, bro. That's the only time it works. But then you've got to come back to reality.
yeah, like at the end of the day, you want people to be able to have credit and to be able to transact in a way that doesn't necessarily rely on them having money now, just now, but like also counting on future money, and to be able to like operate within, time with their money, because money is not just a now thing. It is the way we use it. It is money now and money in the future. You have a mortgage where you say that you're going to pay your mortgage every month, and you're promising all of your future money, and that allows you to buy a house that you couldn't buy if you didn't have access to that. And that's what a U.S. Treasury is. I mean, a Treasury is, give us your money now, and we will give you uh, a little bit more money in the future. It's staked U.S. dollars, if you will, and so like, you need to think about at money not only like in the present, but like in the future. I mean, and that's what derivatives and futures markets are all about. Is about like the, like trying to balance like what things are going to be worth now, but also what things are going to be worth in the future. That's why you have oil futures. That's why you have like all these various commodity futures, because in this moment we're worried about not only what is happening right now, but we're worried about what's going to happen a month from now, a year from now, 2 years from now. And you need to be able to give people the ability to plan for that. And Bitcoin is just like, yeah, we don't do any of that. Just here's some sats for you. So
you'll own sats and you'll be happy.
yeah, you'll own sats and you'll be happy. And there's something to be said for the use case that it has served. Like, it has done a very good thing when it comes to like being an improvement over gold, because that's essentially what it's replacing. It's more divisible, it's easier to transfer, it's easier to self custody. It has all the things that gold has and more.
Yeah.
But
So back to my question: do you think that we will arrive at a scenario where we will have a decoupling, which will allow for it to truly be this stable commodity asset, whatever we choose to? Do you think we'll get there?
I do think that eventually, a lot of people have kind of likened Bitcoin to being like a negative yielding bond, because you do still have issuance, right? They're still issuing new coins, so it's not deflationary money. It's still inflationary because they're still issuing new coins. And once that stops or starts slowing down, you may have some problems with network security. We'll see how that all plays out. But so you are sort of being depreciated. The thing is, as more people, get into it, it's like the whole rainbow chart, right? Like you've got that sort of logarithmic thing. So I do think to some extent that there is a future, if it continues on its path, where it could just be a relatively stable thing, like a German Bund or whatever, that just spends most of its time being negative yielding, and but is quite useful as collateral or something else. I think that future absolutely could exist.
Okay. And then from a just quickly into the Ethereum narrative, because it's a discussion that we had quite recently. Myself and Grant were chatting about, where Ethereum is right now, and it almost seems like from a payment perspective and from a money perspective and using Ethereum as money, it almost seems like Ethereum has fulfilled, and Grant's laughing now because it almost sounds really ridiculous, but it seems like Ethereum's kind of fulfilled that white paper that Satoshi put out, better than Bitcoin has,
Oh,
in many
absolutely.
regards, and with a couple of add-ons, namely the contract functionality and all that kind of stuff.
Yeah, absolutely. Because like Ethereum, to me, Ethereum is the base money. Like there are two kind of levels of base money, two layers of base money, I think, on the Ethereum chain, right? There's ETH, which is like basically like you need ETH to do anything in Ethereum. So like I consider that basically like a base money. And then the other one is stablecoins. Now, you're obviously exposed in much the same way that banks outside the U.S. are exposed to, the dollars drying up. We treat stablecoins in crypto like the banks outside the U.S. treat bank deposits at a U.S. institution. We pretend like they're the real deal, dollars, and we use them as such. And so they're the closest thing we have to base level money. Those two things. So stable-coins that are actually backed, not like these CDP stables, that doesn't count. But like the centrally backed ones, like Tether and USDC and BUSD and whatever the Gemini one is. Although who knows what's going on with them in 3AC. But let's not even get into that. How much of that was backed by Gemini tokens. But anyway, the point is that we treat those like they're base money. And so everything else in the Ethereum economy is basically just leveraging those assets. So when those assets are expanding, the whole ecosystem expands and you get leverage build up over time. And then what ends up happening is eventually all that stuff unwinds and you're back to the base assets again. Yeah. And the fact that base asset, Ethereum, is still worth $1,000 each should tell you that there is actual economic activity going on here to justify those prices.
Yeah.
Mm-hmm.
So
I'd like to just point out it's $1,610 now.
Very nice.
Yeah,
we are approaching the 1,710.
Very good. Well, I don't think I'm gonna leverage short this time, but we'll see. We'll see if I do.
So
just, the correct trade at the minute is to long Ethereum Classic, short Ethereum. and
see, this is what happens when he has
I like it.
the stream on macroeconomics. He kind of loses the plot.
ETC. Let's talk about ETC for a second, because I would like to actually fade that trade, because I think it's a great narrative. The whole they're moving to proof of stake and all the miners are going to revolt and they're going to take their ball and they're going to go home and they're going to turn ETC into Ethereum, but proof of work Ethereum. And the problem with that is what we just talked about, which is there are two kinds of base money. One of them is Ethereum. One of them is stable coins. When you split the chain, you still got all the stable coins, except yours are worth fucking nothing.
Zero. Yeah.
So,
but isn't that the same as what Mr. Richard Hart is doing with his Pulse network? Same story.
Anything that man touches is a scam.
But that's not what the discussion is. The discussion is he's splitting it and he's kind of hoping to create value because a whole lot of minions are going to jump off that, or leprechauns are going to jump off that cliff, and he thinks that everyone's going to follow them.
He has curated a collection of uniquely stupid individuals, and
uniquely being the operative word.
Yeah, and so like,
sorry, I just wanted to illustrate your point with an extreme case. Be very, because I find it fascinating. I find, just for the record, I find that level of stupidity to be beyond stupidity, but just fascinating. Like, it just, I mean, Grant knows I'm completely fascinated with the way that he goes about doing things. I mean, we've laughed about the dress sense. We've laughed about how, like, the man is blatantly spending all these people's money that they've given him, you know, and they just don't realize it, you know, like he's just like this interesting freak who's just completely like you said, he's assembled the most uniquely gifted bunch of stupid people I think the planet has ever known.
Yeah, it's true. And honestly, like, to some extent, like, what he's running is like Luna on steroids. Like,
I don't think Luna's got anything on this guy, because what he's created is sustainable for a very, very long time to come.
Well, yeah, it is more sustainable, but it's just like the level of just it's so obviously, like, I remember when I first saw Hex being shilled on Twitter, and I was like, what is this Hex thing? I'm gonna look into it. And I went to the website, and I'm like, within like 30 seconds, I'm like, oh, so it's a Ponzi scheme.
Yes.
Okay. And the fact that there are people that just can't wrap their heads around it. At least Luna was like an obfuscated Ponzi scheme. I think that what makes Hex so much more sustainable is that it hasn't been infiltrated by people that think it's actually, or by the people with enough money to actually break it. It's just.
So do you think that's what it is? It's just that there hasn't been.
That's a good point.
That's actually a very good point. Yeah.
Because like Luna, it was a victim of its own success. Like it was able to grow and grow and grow and grow and grow to the point where even like large institutions were having we're like, well, clearly this thing works. And so there was like the size of the money that was being thrown at it got to the point where they couldn't even backstop it because it had just gotten too big. And this whole scam is just, you know.
But he's about to introduce Pulse Chain, and it's exactly what you were saying earlier on, is that you forking. Essentially, he's going to fork the ETH network. He claims he's going to give everyone free coins, but actually the irony of it is, or the joke here, is that you had to sacrifice in order to get those coins. So what he did is that he got you to basically give him a whole. I mean, he did the whole spread, Avalanche, you name the token.
Yeah.
He had the wallet set up.
He said, "Give me all your real assets, and I'll give you some fake ones,
and then I'll give you a whole lot back once I eventually launch this chain." And everyone's patiently waiting, and they believe that he's going to do it, and he probably will, because he will create value through this process that he's just done here, even though it's going to be worth zero to start off with. Let's be very clear. Everything will be at zero when it starts. I'm going to be even more fascinated, and we will circle back to this discussion in 6 months' time or in a year's time. And I promise you, we will all be blown away as to the extent of how this stupidity plays out and how much money you're going to throw at this thing.
Yeah.
That's what's going to happen.
Yeah. I mean,
I will not get involved. For the record, I will not get involved, but I know that this thing is pretty much a sure bet.
Yeah.
Oh, I'll be fucking there.
Yep. Just as long as you go into it knowing it's a Ponzi,
knowing,
then you're one step ahead of everybody else who's there. because
Like shooting fish in a barrel. Fuck me.
you know,
I'm gonna come out with one of these Richard Hart fits by the end of this.
Are you going to go for the Prada outfit, or are you going to go for the Versace? That's the question.
I'll take them both. I'll happily take those plebs money.
he's going to be copy trading Richard Hart's closet.
Right,
Yeah.
gents. Is there anything else to add?
I'll say just to wrap up on that I don't think the time for investing in Ponzi's is now, though.
No, definitely.
There is a time and a place for aping into Ponzi's. We aren't there.
Yeah.
I look forward to doing this again. Thank you very much, sir. Bitcoin is now at 24,150, so it's gone up $400 since we started the show. I think maybe even slightly more.
Thanks to us.
And this relief bounce continues. I mean, it's been almost a week. It'll be a week tomorrow, and I'm quite surprised, but it's also very nice to see. I mean, I'm not making a whole bunch of money, unfortunately, but I'm being cautious. I'm like you.
That's the correct approach, though. Like if you made a bunch of money on this bounce, take some profits. It would be my advice, but you do what you want.
Yeah, I've been calling that on Twitter the whole week, and I've been telling all the dumbasses out there. And I've had a couple of DMs. No, this thing's going to carry on. It's not just a relief bounce. And I'm like, no, dude, it's a relief bounce, and it's just a matter of time before the shit hits the fan. And let's see. I think Grant's one of those guys who messaged me today, and he said it's up only. There's no ways. We're going back 200,000. That's what he said.
You know, we've had a few of these. We've had a few of these so far, though, and like. If you look at the percentages and stuff for these relief bounces, we usually go up like 20-25% from, the bottom of the last dip before it. And then, things turn around and you get some drop back down again. The fact that everybody believes that this is the real deal means that everybody's going to lever up and try to make up for the part of the thing that they missed, or all the gains that they lost along the way. And then we're going to have to wash those people out. Just like we washed out the me's of the world that were too bearish. And
Ben, would you be interested in doing a market update with us at some point?
Absolutely. Anytime you guys want, let me know.
Cool.
I enjoyed chatting with you, gentlemen.
You too, sir. It was an absolute pleasure having you on, and look forward to many more. And I look forward to your banter on Twitter as usual.
Very good, sir. And
cool.
We'll see you around.
Sweet.
Yep. Thanks, Ben. Appreciate it. And thanks, everyone. Do all that stupid YouTube shit.
Oh, yeah, that's right, guys. Remember, this isn't financial advice. We have absolutely no idea what we're talking about. We're just doing this for entertainment purposes. Please like and subscribe, even if you didn't enjoy the stream. And if you didn't enjoy the stream, you're very welcome to come and join me for a barroom fight, and we'll chat about it afterwards.
That's right. I'm a macro LARP, remember. Macro LARP.
Ben knows nothing.
Not financial advice.
There we go.
There you go.
Goodbye.
Right.
All right.
Perfect.
Bye.